The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Got to have the bomb ticking down sign. It's just not a show without it. And, of course, 10% less Game of Thrones spoilers for the season end today in the show, as always. We're flat on the S&P cash, although we got down to 24.39. Volume has been light and is going to be the lightest 2 o'clock that we've had in about forever. And there's got to be some kind of quaint country saying. But it's light. It's ridiculously light. It's under 1.5 billion shares as we start this show. So what can we say about it? It's light, very light. And that's about all you can say. So we've gone down, retested what I suspect is support, which was about 4 points lower than Friday's close. Did so on light volume on Friday, did so today on what will probably be even lighter volume. And one of the things that you hate to be is short a market going into a 3-day weekend with volume decreasing. There's the old saying, never be short a quiet market. I've seen some stocks that I've been watching in the Tech Insider kind of pop today. Not a lot of news in them, but guess what happens on days like this and weeks like this? They do not let the shorts out easily. If they've got them on the run. And so a handful of stocks maybe going a little higher. But for the most part, not a lot of movement. Even stocks like Tesla that have been under fire. This thing was down below 340 earlier in the day. It's printing off in the mid 345s. Some of the stuff that has been heavily shorted out here, you just don't want to be short this week. Now, I did a great deal of work over the weekend looking at the history going into 2 and 3 day weekends and whether or not charts with basically weekly charts are any better than any other chart. Are they better than dailies? Is Friday more magical? I.e., there's always been the theory that more people go home on Friday with stocks that they are, they're the people who's going to hold. You're not going to be able to thrust them out of the action. Just did a lot of work on that. Worked a lot more on my machine learning model for the markets. In fact, I'm kind of glad that we're back to trading here because it's made me actually focus on trading and getting sleep, which has been in very short supply, probably for 6 weeks for me. I've really gone to town on trying to convert everything that I do away from traditional moving average models that have been around for forever. I was a giant fan of the summation index from the McClellans. That can be made a great deal better than it is. There are a handful of errors that you just can't run away from with moving averages. Sometimes you can paper over them with oscillators, but they're always going to have some level of disruption or error or aliasing or a handful of other technical issues that come with them that can be solved much better, much more efficiently, and at the same time give you a number that lets you know just how well it did. That's not there's not a lot of room for interpretation. Either it's better over time or it's not over time. So anyway, I spent a lot of time over that over the weekend. So what did I come up with? Well, I'm pretty much saying that you don't want to be short this week or probably into fund buying next week. We did go long the markets today in the daily trading newsletter. Is there a huge amount of upside to the market? No. But is it highly probable? The answer is yes. So probably we're going to start seeing a little bit of upward pressure, I suspect, either by the close today or midday tomorrow. Wednesday, we're probably going to see the biggest volume of the week. And the reason why is most of those guys that are going for the last big hurrah up there for the Hamptons leave now about mid afternoon on Wednesdays for the last few years. So that's what they're going to do, is just say, don't let the market move. And then you get into real light volume on Thursdays and Fridays. And guess what? A lot of shorts are going to go, well, it's Thursday. This hasn't really been profitable. So what am I going to do? I'm going to cover, and then I'm going to wait for maybe fund buying to be over next week. Now, of course, fund buying, when we look at that, is the last couple of days of the month. That's Wednesday and Thursday this week, of course, and Friday. And then what do? You get into the 4th, which we're off the 5th and the 6th. You can still, anybody that has a fund can still buy in the 5th and the 6th. So you get almost, you get 7 days and 4 trading days with a bullish bias that's pretty tough to knock down. Now, I can't guarantee the market's going to go higher. I can tell you that the chances of the market probably going lower between today and a week from this Wednesday, i.e. the 6th, are pretty low. If you wanted to short this market, you're probably better off holding your breath and your money and looking at next week sometime, depending on what happens. My guess, though, is that a combination of factors are going to make the market move up a little bit, at least through the first week of September. Those being, of course, the hurricane is going to mean that there's a lot of things that need to be rebuilt. And the first thing that happens in the market is everybody starts looking at Home Depot and Lowe's, as a lot of homes need to be repaired and bought. There's some other companies out there that make generators you can look at, but I think that top is kind of in. So what do we have? We've got a kind of a market that is probably going to slightly move higher all the way through next week. When we come back, if the sky hasn't fallen with so many people yelling and screaming that the end is nigh, then we can maybe start a rally for the fall. Maybe we get a little pull back into mid-September. But I think we can see probably the next 8-9 days, 7 trading days, fairly clearly as a bullish bias. And probably the best thing can happen if you're short is that the market goes sideways. The downside is some of your brethren that are short start to cover, and that means maybe you have to cover too. We'll be back with a little bit of histoire on this day.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That it's all just a little bit of history repeating.
On this day in 1957, the first object came off our planet and into outer space. Most people will say, Dave, that was Sputnik. Well, maybe, maybe not. I suspect that there's a fairly high possibility that today was the first day that we launched something into outer space, and not just into orbit. The Nevada test site saw a nuclear explosion that, according to legend, and I suspect truth, and we'll talk about that in a second, launched a manhole cover into space. They were running a thing called Operation Plumb Bob. It was a series of 29 nuclear explosions meant to study various aspects of nuclear bombs, including how to contain the fallout from an underground explosion, and on this day, to also test the fail-safes in atomic weapons, lest a plane crash with one and it goes off. So this was supposed to be about 50 tons of TNT going off, not a fairly large 5 megaton bomb going off below ground. They'd built all these tunnels back into it, and sealed all of them off except the last one where the bomb was. On that one, they put a bunch of blast doors that they thought would be fine if the safeties worked in the bomb, thinking that it would, not thinking that it didn't. On the last door going out, or on the top of the little building going out of these tunnels into the bomb, there was a manhole cover that was supposed to be welded shut. Well, they put 2 small little tack welds on it, and we're going to come back and weld the whole thing. Someone told them to run off, that it was getting too late and didn't want them to do it. So there were a bunch of cameras at the site, and what they were able to figure out was that, well, first of all, the bomb went off as it not as it was designed, i.e., that it was supposed to be fail-safe and only have a small explosion. It actually truly went off with its full, huge, whatever it was, 10 megatons. So they knew that they had a problem there. The high-speed cameras watching the ground around it, though, captured something else, and it was a few frames of that manhole cover leaving the Earth. It was traveling at somewhere around 6 to 7 times the speed that it needed to be to reach escape velocity. And that's not just getting in orbit, which is about 17,500, but 25,000 miles an hour. It actually was going, most people think that have gone back and looked at it, somewhere between 70 and 110,000 miles an hour. Now, the scientists initially thought that the manhole cover would have just literally burned up like a asteroid coming in. What they didn't go out and think about or even look at in future episodes, of course, it wasn't a big deal to them at the time, was that it was made out of a kind of iron that's really not available too much anymore because they thought it was it caused cancer. Wrought iron, and wrought iron is got a thing that's called ablative, i.e. the carbon in it will kind of peel off in layers. If you ever see anything like the steel frame of a car or something, you'll see that it kind of rusts in layers even though it was poured as one piece. It'll kind of flake off a little bit, layer after layer. It wasn't poured that way. It's just the way that the crystalline structure works. Well, wrought iron is very good at this. So when it went up, the first theory was that it would have just burned up because it would have remained flat as it went up through the Earth and caused a lot of resistance. And so maybe at 2,000 or 3,000 feet, it would have just slowed down and stopped if it didn't burn up. Well, let's flash forward to about 2010. The Mythbusters guys decide to blow up some methane to go after a, what we call it, a myth of the manhole covers blowing up and going, very high in cities. So they blow them all up, and guess what? Instead of going flat against and straight up flat, they actually turn, become very aerodynamic. The ones that they had with some fairly unexplosive methane reached heights of 150 feet. So you've got several factors that do go into this day in 1957. We launched the first object off our planet. It most likely made it into outer space and will be floating for just about forever, unless it hits something on the way. But a lot of people discount this thing, but after a lot of research, it looks like it's highly probable that we beat the Russians into space by 2 months. Put that in your pipe and smoke it, Mr. Rusky. Anyway, what else do we have going on? Let's go ahead and take a look at some stuff. Like I said, we'll look at Tesla fairly quick. Yeah, a lot of nuclear fusion breakthroughs, but nothing that is going to change anything. Nothing that turns the power on, but always interesting. We were looking at Tesla out here. As I said, I think if the market's going to roll over, Tesla's got a fairly decent pattern that makes me think this one will be the first one to fail. So I continue to watch this one as a canary in the coal mine kind of play. Last time this thing came down to 331, it did so on 6.5 million shares. We're down on just 3 million shares today, and it didn't really hold the lows. My guess is this thing drifts back up to 370, and when we're up there, I'm much more willing to think of the market heading south instead of doing anything else. Some of the other stocks that are, the deplorables, let's call them that for the moment, seem to be just kind of hanging around. I didn't see a lot of weakness in many of them today. Some of the ones that have been beaten down the worst, they've come back and hit highs like Western Digital. They've done so on lighter volume, but they're continuing to hold these highs. This one I would be short right now if we weren't going into a weekend with lighter and lighter volume. To me, this is where you really want to see these things drift back higher and really get a good short off at the highs if these things are coming back on light volume. In the meantime, as we said, the volume is nothing. We're at 1.56 billion shares on the NYSE, and that only means one thing: the volume is wimpy. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll take a look at some of the other stocks out here. You can always give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. Yeah, Intel's just hanging around back here. Just light volume down today, though, so far. What do we have? 8.7, 8.8 million shares. You had 14 million on Friday. So that kind of tells you everything you need to know. There's just not a lot of juice down here today. And of course, trying to keep pushed down. But my guess is that either at the close today or tomorrow, we're probably going to see this market start slowly moving up. Not a lot of impotence to buy, but not a lot of impotence to sell either. And we'll see both of those sides of that coin through the rest of the week. Okay, let's take a look at Apple. Although I announced it last week, everybody acted like it was new news today, and that is Apple will be showing their new phones on September 12th and shipping them maybe by the end of September, maybe the first week of October, it looks like. So we'll find out. Apple, of course, a little pop up here, not much juice, 17 million shares. That's going into 70 million share high on August 8th. So we've had some juice up here, especially that second day of August. This is just kind of going sideways. People have asked me whether I think this thing could come back, and I think it could, but there's no sign of this at the moment. You had a fairly good test of the August 10th low that had 41 million shares, with the August 21st low with 26 million shares. And of course, the only downside is not a lot of volume on this move back up. So probably more of a trading range right now until we find out what happens with the new iPhone. It could be kind of tough. Let's put it that way. And of course, gold bugs have having a big day out here. Even the GDX is holding up here close to its highs. So what else do we have? Take a few looks at it. Keep waiting for UNG to possibly make a low. This thing, kind of a nice move out here today, but off the opening low. But it's for the most part, this thing's going sideways. I have no real idea how to handicap all the problems in Houston in natural gas, although from everything I hear, it's not really matters unless you're talking about LNG gas. And I guess maybe you could say that this thing kind of stuck out here in this trading range also tells you that. I would like to pick this up fairly shortly. This is the season to buy natural gas. It's just haven't seen any kind of big signals yet. First question through email is if I'll look at the SMHs, so we'll do that. Yeah. Okay. Again, we've talked about this one being a asymmetrical triangle. No reason to go buy this thing until it breaks out one way or the other and then fade that direction if the volume confirms. But at the point right now, this isn't a lot of movement. There isn't a lot to say that this continues down further. A lot says that this actually could just go sideways and maybe even a little higher because this has attracted the view of many shorts. Let's take a look at a few other things out here. Question about looking at the IWM. Do I think the same thing? Even more so because the IWM has had some, well, I'm going to say a fairly decent test. You got 40 and 50 million share lows going back to May 18th. Got pierced by 42 million shares on August 18th. So you did get down there, but the volume kind of shrunk about 20%. And you don't want to see that kind of volume. The energy off the high was more. My guess is like a lot of these stocks, this thing is going to go maybe up to 140 again. There's a little gap up there that I see that would make me think that just in the next handful of days and into fund buying that we could see that high 139s, 140 in it. And if you're thinking about shorting, that's where the risk reward actually does come in on the next leg down. Let's take a look at HLF. A lot of discussions about how they could run any lasting shorts out of Herbalife. Doesn't seem to have done anything for this one today. Very interesting, this thing going totally sideways for the last 4 days. I'm going to be watching this one closely on the opportunity that this thing just ran a bunch of shorts and this is going to pop right back down to $60. The IVB has been kind of drifting up here, but again, there just isn't a lot of juice. 329.90, which is a July 25th high, continues to be kind of a movie. Okay. So, this thing has done a fairly decent retracement. Let's take a look at it here. Again, I think we brought this up on the show, and that was that this had a very nice confluence range from $300 to 303, got to 302.57. If you haven't got Tom O'Brien's book on the art of timing the trade, it's one of the better ones to take a look at with some of the theories of confluence. That's where two Fibonacci retracement levels form one super one, kind of like super twins, form of hawk. I didn't watch that show, so it's probably wrong. I've heard about 20 people say that though. But pretty good. 303 right there comes in from the low of May 31st, and of course the low of December 7th. And so you bounced off that. You didn't, you had 1.6 million shares on that 302.57. You've kind of bounced up here. Now you're getting fairly close to 319.46 is the 618 retracement. And you kind of spiked into that today, but my guess is that you could get up into that 320 area and maybe even hold it through Friday. Again, I'm not looking for any kind of downside target in this market. Maybe could we go down a little bit before we go up? We could, but my guess is by the end of the day, we're probably going to see this thing start moving back up closer to 24.50 than 24.40. That's at 24.42 at the moment with just 1.6 billion shares. So just no juice in this. Okay, so what else do we have? Oh, we've got the break is what we have. Okay, just as a reminder, Wednesday will be the last day before I go on vacation. I'll be out of here Thursday and Friday. Be back next Wednesday, not this Wednesday, next Wednesday. So I'll have a few days off. A lot of time to work on Monday.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And 2442 on the S&P cash. As we said, volume continues to be, I'm looking for more adjectives other than wimpy, but certainly we are not seeing anything out here that makes us think that light volume up or light volume down. We went to support, we went to resistance, and there's no volume either way. 1.64 billion shares at 2442. Normally, what you don't want to be on extremely light volume is short the market. And that's why generally the sayings that stick in the market, generally there is a reason for. Quick call to ask about TLT. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And what else? So you got TLT. The question is, where would this thing come back? And again, a lot of these stocks have some fairly deep setups back to being short. So, back to picking them up on Confluence. And this one is no different. Looking at Confluence coming in on the TLT at let's call it 123.50. Yeah, I'm going to call it that. 123.50 is kind of where you're looking. That's fairly nice out here. Could it continue up higher? It could. This move off the July 7th low, though, did not have and still has not had a lot of juice in the TLT itself. You went down on 5.7. You're up on 3.6. I think you would not be far-fetched to look at somewhere around 123 to 122 as being some kind of support level in this if it does start to pull back. And I think it certainly could. And that maybe the next run gets it up through the 128.57, but seems like it's kind of petering out of energy. Maybe that changes when we get into the fall. Maybe energy comes back into it, but so far not that much now. Quick question to look at Netflix and FLX. Okay. Okay. Now, if you're looking for one that's close to support, we've been talking about this one for a while, and it doesn't get much better than this. If you think that Netflix is going to the moon still, I get kind of nervous buying at highs, even highs of pullbacks. But you have one of the best setups with Confluence. If you can get even just a little bit more of a pullback, You got awful close to this on August 21st. Normally, you don't get a second shot at it, but confluence comes in at two levels: the low of July 6th at 144.25, and the other low at 110.68. Am I really thinking this thing can go blow away the 190.150? I don't know if it could, but I think you could get a fairly decent chance of a retest. And this is your risk down here, which is about 160. What is that? 162 to 161. So if you see anything in that one, that would probably have me looking at least through fund buying at an opportunity. I got to sneeze. And we've talked about this before. It's genetic, and they proved it. There is a gene that causes sunlight to make some people sneeze, and I am one of them. And it affects 1 out of, I think, 6 people. So it's fairly common. But no one holds the telephone for me, do they? They haven't thought about me lately. We got to change that. So Netflix, fairly nice pattern. You came up with huge energy between the 144.25 low on July 6th up to this July 21st low. You've pulled back. You basically got into the 382 of that first one. And of course, that you're now in the 618 level of the longer one. And that's what you're looking for. I don't know what's going to happen. Can't bet. I do place bets. I think we're going slightly higher. But if you were thinking we were going slightly higher and that there was a good short squeeze coming, Netflix is perpetually shorted on a daily basis. My guess is that this one would be kind of interesting. If we do, I'm going to say 24.45 on the S&P cash pretty much puts a lid on the bottom side of this market for the week. So we'll see that. That's only a couple points higher. So you really don't need that much more to confirm much else going on in the market. We look at the SMHs. We looked at some other stuff. What else do we have? Looked at HLF. We'll look at Expedia real quick. This one, of course, lost its CEO to a company that has had its own share of tumult, and this got back up to what should have been resistance, fell apart. Pretty interesting to see a CEO of a successful company leave it. Guy's been there for a while, though, maybe looking for some new challenges. Expedia is doing pretty well. I don't think that this CEO changes much as anything. It's just been a very expensive stock for a while, and this guy was given a golden parachute filled with dollars and dollars and more dollars to go to work for Uber and kind of patch up their almost self-inflicted wounds. So, what else can you say? Not much happening out here. You're going and have gone through the previous low on light volume. Of course, Priceline, not a good example because this one did blow up on earnings. It's back to its support level, but on that support level, you should be looking for a whole lot less or a whole lot lower prices, as this has come into the previous low that had 1 million shares and into the gap up that had 852,000 shares. Well, Friday you had 400,000 shares. Today, 350,000 shares. This, I'm going to call it 1775 area. Looks like fairly decent support. You might get one more bite at the apple on that one. The downside is you have this huge gap to look at, and you may get more of those. Of course, you've got a while before earnings comes out again. Could you get back up to $1,900? I think you could. Maybe an option play on that one for a bounce and maybe short covering. You can watch that one fairly closely. I have a question that we've brought up, DLR, which is the Digital Realty Trust. I think we're going to run out of time here. And if this thing's given any kind of signal that Silicon Valley is ready to see the huge bubble burst in the San Francisco housing and business startup area bubble. And you got a little down today, but not much juice, 445,000 shares. We'll talk more about this when we come back. Very special Monday.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price, price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Pete, cash volume is under 1.7 billion shares. Very, very light volume. And of course, if you're really pushing highs, if we were pushing something like 2470, I'd be a little nervous that we're just kind of going through the price range that we saw on Friday with even lighter volume. Makes me think that we're just getting wound up for a short squeeze of modest proportions into Friday as shorts decide to leave. Of course, as we said earlier in the show, come Wednesday about 1 or 2 o'clock in the afternoon, the big men of Wall Street head off in a puff of smoke with their Teslas up to the playland of the uber rich. And that starts the exodus, but normally they start leaving now, at least the last few years on Wednesday afternoon, leaving the B team in place. And the one rule for the B team, don't let the market go down. It can drift up a little bit. Just don't let it go down until we get back. And we're not going to be back till Tuesday, maybe Wednesday of next week. So you look at that, you look into fund buying. My guess is that we're going to probably see a nice little bounce into fund buying next week. And the bias is probably up through the next 7-8 days. Question in the den on a few things is, what does Digital Realty Trust do? They really are very good at renting space to startups, and that's why I suspect when the spigot gets cut off on this one, you're going to see it first as San Francisco's bloated price of real estate probably comes back down to earth somewhat soon. Not much other than to say about that. Wimpy volume, keep an eye on it. Above 24.45 on the S&P cash. Probably puts a lid on the downside of this week. So watch that in the next hour or so. In the meantime, sell when you can, not when you have to. And we will see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.